Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
All right, guys, Wednesday. Let's just go right into the charts here. Let's see here. I don't think we have any major news at the bottom of the hour, but let me double check. Okay, we do have durable goods and Canadian core retail sales in about a minute, so the market will probably react to that, but that's not like super major news. So I think we have the time to go through the charts here a little bit. Got some rollovers on Bitcoin and natural gas. Make sure that I have these other workspaces closed. All right. And here's our chart. So going over to the treasuries, yesterday we had that huge jump on the PMI numbers, but look overnight, they're giving them up. And you know what? When you dive into those CPI numbers, what I see is stagflation. What I see is business activity slowing down and prices continuing to go up. So I don't know if that PMI is actually as good for interest rates as the market knee-jerk reaction thinks it was. And but you know, over here in the S&P 500, they don't care. Like, they took off on that thing and they've just kind of continued going up. I'm seeing a lot of weird things like this, like Tesla yesterday. Okay, so Tesla earnings, like, all their numbers were bad, but they said, we're going to go, you know, try harder on making cheaper cars or something like that. And so everybody thinks that that's great. And I'm like, yeah, like they said that like 10 years ago, didn't they? They haven't done squat. I have like zero confidence in their ability to execute on that. But we'll see. Maybe they focus this time. Okay, oil up a little, you know, yeah. We're kind of in a range. I don't think oil has really told us where they want to go next leg yet. Gold and silver trying to recover those losses from 2 days ago, and copper's still looking really good. The Japanese yen just continues to be like oof. And some people are, well, so like 155, I believe it is where people were expecting intervention to come through. But now some people are saying that it's actually 160. So there could be further to drop in the Japanese yen. And it sounds like they have a policy meeting this week. They'll discuss their next steps, but that they don't expect to raise rates. So that's not going to help. And the dollar's still kind of where it was, 105.55, although that PMI did hurt them pretty good yesterday. And you got Bitcoin making some moves, but you know, it seems like they're having a really hard time. Like they saved themselves from the depths, but they're having a hard time getting a trend going. So that's the Bitcoin. All right, so on the durable goods, we got 2.6% versus an expected 2.5%, and Canadian retail sales month over month was -0.1 versus an expected 0.1. So it looks like there was a little bit of a push higher in the treasuries that was very short-lived. Coming back over here. So that's what we got. I think this range is okay, though. I think this range is okay. Let's come in here, write a few things. Okay, so for flows, let's note that JPY intervention levels, but maybe further away than thought. Okay. Today we get durable goods. I don't know if that's really going to drive too much flow, but we also have, let's see here, what is it? 5-year auction. Yesterday's auction was positive. So I think for that reason alone, I'm leaning slightly to the long. Could we say here, my bias here would be slightly long in treasuries. Neutral in equities. Well, we had a little bit of a dive there, and I'm still kind of watching here and trying to see. Oh, by the way, I think I'm a little bit behind. I got a couple things on my mind here. But good morning, A. Paul, Robert, Smitty, Uzi. So, I got two things on my mind. One is there's this conversation going on in Discord. Somebody was saying like, oh, I know this one person that was like trying to make $10,000 a day or something, and it seemed like they're doing it. I was like, hey, be careful about those because they might be doing well for a year and then totally blow the account, right? Then there's this guy saying that he actually traded for a firm, so that's interesting. The other thing on my mind is that HashiCorp is being bought out by IBM. Can you believe it? Probably don't care. Unless you own HashiCorp stock and then you're up like 10% overnight or something like that. I looked at that one. I was like, well, the stock price is actually getting to some attractive levels, but I don't like the direction this company is going, so I don't want to be in on it. But it looks like you could have bought it and IBM would have bailed you out, right? Yeah, so so the reason why HashiCorp being bought out is a big deal. If you want to like automate the creation of your environment, so like all this stuff, like if you're in the cloud, your company, and you are getting all your stuff hosted by AWS, right? So you might have like a task that runs in their Elastic Cloud thing where you say, okay, here's the process. It uses this Docker image, and I'm going to run 50 of them or whatever it is. And if you want to, you can just go into the interface and set these things up, right? But then somebody else might go into the interface and change it, and they might like screw it up, and you have no control over it. So what we do is we do something called infrastructure as code, where in order to make those changes, you have to change code in a GitHub repository in order to make changes to the environment. And the most popular framework for doing that infrastructure as code for cloud platforms is called Terraform, which is created by HashiCorp. And in the last year, HashiCorp basically changed their license to make it difficult for anybody to do like a cloud Terraform offering to compete with them. So a couple of people were kind of upset about that, and they forked the repository because of that. So now IBM's coming in and buying it up, and we don't know what they're going to do with it. Hey, this movement here in treasuries seems a little odd to me. I think that we might be seeing some Japanese yen intervention here, guys, because that move don't make sense, and it is moving with the Japanese yen. Oh, that's wrong. Anyways, put the wrong one up. Hey, the Japanese yen is already cooling off. Is it yen intervention? I'm not entirely sure. So the thing I'm not sure about when I was doing my reading this morning, there was talk about, is there going to be intervention in the Japanese yen and everything? And the people in Japan and like lawmakers and stuff were kind of saying, well, we thought that 155 would be like a doomsday scenario where like we really have to step in and do something. But now they're kind of like, well, it seems like the weak yen is not actually that big of a problem and isn't contributing to inflation, so we're okay with it. So I'm not entirely sure if they are going to intervene here or not. But I think it's worth a shot. I'm still seeing some flow here in the treasury and some pretty... That's no good. VWAP seller says alligator. Does look like it's coming back to the VWAP, and that would have been a better place for me. I might have to take a little bit more risk on this than I would like. But I'm not liking the way it's acting right there, and it does feel like that whatever was driving that buying is just gone. Yeah, see, now I took the extra 5 and it's not. I'm already out of rope. Tough call. I'm not sure what's going on here. Well, now I definitely got to puke. Good fucking great. I gotta believe I lost 20 ticks that quickly, man. How long was I in that for? I was only in that for 3 minutes. Jeez. Flipping 10 lots with a 2-point target and E-mini is ridiculous. Must be throwing Apex accounts. Yeah, I think you're probably right. This was weird. I honestly thought, man, I'm really unhappy with the way that I executed that, because, okay, so I thought there could be some continuation. I was seeing some flow come through, right? In fact, actually, the cumulative delta in the 10-year is not bad right now, right? But then it went 5 against me, and I was like, oh, I should probably puke. And then before I knew it, it was like 10, and so now I'm like, oh no, now I should probably. And then it was like, you know. Because I wanted to wait and give it a little bit, and like every time it just kept going further than I wanted. So I probably gave up $15 there for no reason other than just kind of being like frozen like a deer in the headlights. I think, you know, we'll survive. When I say that, it's like kind of hurts emotionally a little bit, but I think I can get over it. There's definitely something weird going on here. That dip was weird. That buy all the way up to the top of the range was weird. I should probably, if I take another trade, I should probably be a little bit more cautious because it is slippery. There's definitely something going on in the Japanese yen, though. Israel strikes 40 Hezbollah sites in southern Lebanon. I can see a couple of headlines out there and things that could be going on that could be bullish, but not the bearish. And so I'm a little perplexed as to why we are dropping down here in the treasury. I guess I want to reverse it still. I'm not seeing anything happen in the spread. I guess the dollar is kind of... So there's definitely movement in the dollar. There was definitely movement in the Japanese yen. That doesn't completely explain how the treasuries behaved, though. That's weird. Like the market makers just pulled all of their bids for no apparent reason, just to screw me over. Because as soon as I got out, it stopped, right? Low resting liquidity at 23.5, huh? Yeah, okay. Interesting. Try again, since it looks like they're giving me favorable prices in this area. Let's try and keep this one on a shorter lease than 20, though. Right? Okay, well, now they're stacking offers at 23.5. Wait, is it pronounced Rafah? Okay, so my news squawk just said that Israel is going ahead with operations to attack Hamas in Rafah. I thought it was pronounced Rafah, but the guy on the news squawk said Rafah. Help me out here. Rafah. Well, that's kind of more the way that I said it. But it doesn't really tell me the guy in the squawk is British and they say everything wrong. Okay, maybe. So that would be geopolitical risks. That would be like a flight to safety sort of flow, but we're not seeing that in the treasuries at all. There's the Japanese yen thing, which we would think would be a buy and maybe wouldn't affect, we have had these ones where like the JPY went and the treasuries just ignored it. That has happened. But if it was going to affect the treasuries, you would think that it would be a buy. And we got the auction today, you think that would be a buy. And we had durable goods, which was kind of like, meh. They're selling it. And downtick. Over a fairly large iceberg at 23. There's not any other big news pieces like economic releases today. We're in the blackout period for Fed speakers. I can't figure this one out, guys. Dollar is wiggling there. If the dollar is strengthening here, that could hurt the treasuries. There's another tick. Well. And some stops. I don't think I'm the only one here a little bit perplexed at what's going on. Okay, well, they fill my limit order almost immediately, though. I think I'm done, man. I don't understand this at all. Well, look, it comes right back. And on hardly any volume. Oh, this is I'm feeling a lot of internal turmoil here. I think I need to give it some time, though. That time, the yield curve steepens. Well, it's coming back to the hole. Is there buying? There's a little bit. There's a lot of absorption down there at the bottom. That like stop run. I did. Should I be stopping? I don't know, man. If this one doesn't work, if I can't get a positive tick out of this, then I really should stop, I think. I still kind of think all of the flows that I know are long, that was kind of a stop run. There was a bit of absorption down there. Like everything that I see kind of says to me that this is going to turn. But I'm not getting a positive tick here. Kind of feels like it's just going to throw you around and not really move with conviction. You might be right. Like, in order for this trade to work out, there really needs to be a meta order long lurking out there. Okay, that's interesting. So, they did take 23.5 bid, and now they're kind of stacking on the offer a little bit and forcing a couple of, well, not forcing, but trying to scare people into selling into 23.5 and now iceberging. It seems very shifty. Like it really feels to me like somebody trying to stop everybody out on the change down so that when it flips back harder. I just heard some more news squawk stuff about Israel, I think. Israel military says it hit 40 Hezbollah targets in the area of Ayita Shab, southern Lebanon, including storage facilities and weapons. I got 2 ticks favorable. It's better than nothing. Okay. 2 ticks down, just like that. And stacking at 23.5. I think it's step of scare. Let's see if he's there. Are you really there? Knock, knock. No, you're not. Some shenanigans going on here. Uptick 24 on only 755. Are you kidding me? Well, okay, it didn't last, but still. What is this? This is wild. This is a wild ride, guys. I know it only moved 1 tick, but like to go down 2 ticks and then up 3 ticks and all of that on like less than 1,000 contracts each tick is really weird for this time of day and everything. Like it is moving like we just barely had news and we did not. I need to get a squawk icon. Only gives me a feed. I've used Trade the News in the past. I think Financial Juice gets the job done. You're not going to find a better price than Financial Juice. I'm not going to say they're the best news squawk. I really think that News Squawk, formerly Ran Squawk, is a better squawk overall, but they're too expensive. They've gotten cheaper. They've gotten a lot better, but they're still kind of outside of what I'm willing to pay at least. And uptick 24.5. On only 339. Now an iceberg at 25. But they're filling that awfully quickly. And 25 goes bid after 5,000 contracts slam into it. Do you see this? Like, look at the so again, okay, so we had the 6:30 news. It didn't really react too strongly to it, and then we had this sell that kind of seemed to make no sense, and then we had this strong buy that seemed to make no sense. And I tried to take the continuation, and then I got slammed all the way down to here. Then I tried to get in again, and they stopped me out, and now I've been in this. This whole area through here. This whole area was games. Like, they were able to tick around very easily. Way easier than you should be able to tick around in the treasury. And now that all the way to 26, what? That is some BS. And look at, so right here, this is what I'm going to call a stop out. I think that there was some people getting stopped out here. Now we're recovering that. In cumulative delta right here. See that? So none of those moves in and of themselves are really very predictable about like what's going to happen next. But like, that's just the context. The context is it's slippery, and it hasn't been this slippery in a while. You can tick up on like 500 contracts just like that. That's pretty slippery. Makes a scalp for us a little precarious, but I'm trading micro contracts, so it's okay. But what I do have, the things that I do have that are that are, you know, possibly predictive. JPY intervention, durable goods, 5-year auction. Let's add on here Israel military action. $26 was seller cost basis. So that might be a line in the sand that might be. Should we not call it a line in the sand, a benchmark to watch? Okay. So I'm still seeing somebody try to stack on the offer. I wonder if that when they tested that stack before, if whoever's spoofing that is a little bit more cautious about it because they almost got filled there. So the dollar is still kind of in this channel. I'm seeing gentle upward pressure in the Japanese yen. Okay. Department of Labor has raised the overtime threshold. The new rule says that everyone who makes under $58,000 a year and works over 40 hours a week must be paid time and a half. What was the rule before? That's for people who are salaried. Wait, so are you saying if I no wait, how would you pay anybody time and a half if they're salaried though? Don't understand. Bid at 25 looks good. Okay, so here's somebody saying this applies specifically for salaried employees. Let's read the Yahoo News story about it. The administration on Tuesday unveiled a rule extending mandatory overtime pay to an estimated 4 million salaried workers, going even further than an Obama-era rule that was struck down in court. Okay, so a rule that maybe won't last. The rule will require employers to pay overtime premiums to workers who earn a salary of less than $1,128 per week, or about $58,600 per year, when they work more than 40 hours a week. Oh, okay, I think I understand. So they're saying if you get paid less than $58,000 and you're working more than 48 hours a week, then they have to start paying you more, so that they can't just be like, oh, we'll just give people salaries and then force them to work overtime. And dude, that is pretty, that jump on the chart looks a little wild. Can you go over the yen/rates relationship if you get a chance, please? Yes. Okay, I think we understand the rule. That is interesting. I actually kind of like the rule, to be honest with you, but it does sound like something that the Department of Labor does not actually have the power to do, and then we'll get struck down. But I do feel like that companies will come and lowball people on salary and then force them to have really high, they expect you to work overtime. They expect you to work more than 8-hour days and we dealt with it just by moving salaried people to hourly. Well, it does kind of, this is a whole thing though, is I feel like there are a lot of people out there that are on a salary and shouldn't be. Like, to me, salary is we're paying you for you, and we get all of you, and they're paying a lot to get all of you, right? Whereas if there's sort of like these hourly expectations and they care mostly about how much time you're working, why is it a salary, Like, a salary makes sense for a job where how much you're working ends up being really flexible. And I can't imagine who. So they're saying 4 million workers. I'm surprised that there's like 4 million workers out there. Well, I mean, I don't know, 58, almost 60,000. I guess when I started in the workforce, I would have qualified. But whatever. Okay, so we had a pretty strong jump there in the treasuries. Again, I'm not, well, okay, I am seeing some flow long in the 5-year, but not in the 30 and the 10. So they of course came back to kind of like, the last major stop area. So let's talk about the Japanese yen relationship, okay? In Japan, they have had free money forever interest rate policy. Sorry, what do we call it? Negative interest rate policy for like as long as I've been born. Okay. So if you are a pension fund, how do you do that? Because how do pension funds work? Well, they invest mostly in like bonds in order to grow the size of their fund and deal with the effects of inflation and yada yada yada. Okay. So if you are a pension fund, you can't buy Japanese bonds. Their interest rate is negative. So what do? You take your money overseas. And this is why the Japanese yen currency is so low compared to the US, right? It's like 150, right? Normally when you're talking exchange rate, like with the euro, it's 1.07, right? And the exchange rate with Japan is like 150 right now, 155, something like that. It's 155 because that's like the line in the sand that they've kind of been eyeing. Okay, we probably passed 155 there points this morning. Okay, so what ends up happening is Japan basically ends up like financing everybody else. That all of that money is leaving Japan and going to the United States and to Europe and buying treasuries and corporate bonds and maybe even some stocks over there. Okay. And meanwhile, the Japanese, what are they going to do? Because they're, all the money is going elsewhere. How do they support their stock market and everything? So what the Japanese central bank does is they're like literally buy ETFs in the meantime. Okay. So what's happening is that Japan has experienced inflation just like everybody else. And so they have now equalized their interest rate policy. Their interest rate is now 0 instead of negative. And that's a big shift. But they are kind of hesitant to raise it too much and to be too aggressive. And so that is hurting their currency. And that is why the Japanese yen is down and continues to struggle. Because the market seems skeptical. They're not convinced that they're really serious. Okay, they think that the Japanese will be easy monetary policy forever. Okay. Now, because so much of that money is coming overseas and a lot of it comes into treasuries, both the Japanese central bank and the Japanese pension funds, etc., are the largest holders of U.S. treasuries. Okay, so what happens with the exchange rate between the dollar and the yen? It directly affects the demand for treasuries, and that is why the correlation between the Japanese yen and the treasury are so strong. So, generally speaking, if you pull up a 6J chart, okay, the correlation between the treasury and the 6J is positive. If the 6J goes up, you're going to tend to see buying in the treasuries and vice versa. But they can diverge sometimes. They do say, oh, you know what? this is a move in the yen, and it's going to be a really big move, and we in the treasury should ignore it. That does happen from time to time, but generally they're positive. Okay. Sometimes they'll diverge. There's been a couple of points here where it was like, this is good for the yen, but it's bad for the yeah. Anyways, I've seen whispers about the absolute shock the yen carry trade unwind could cause. Yes. So one of the concerns is that if the Japanese currency, it's kind of been both ways though, hasn't it? Because there's been a lot of, these guys are short the yen, and then when the central bank comes in and does its intervention, they're going to screw everybody, right? And I would say largely that like the speculators and stuff are short the yen. But then there's this other side of it, which I think is what the carry trade would be, right? Where if that shifts, I guess that would actually be the same direction, right? If that shifts, the Japanese yen could appreciate too quickly and could really screw over a lot of traders, because the carry trade is something that is like huge, right? I don't know if I can really speak very authoritatively on a carry trade. Like, I know that like the idea of it is kind of simple, but I think we would want to talk about it in practical terms, like how would you actually execute a trade like that and everything. And maybe that's something I should do a little bit more research on and make a video for. By the way, the dollar at lows of the session now. Is it of the session or just that? Yeah, actually, they broke the low. And the treasury just 2 ticks up there. Okay. So they're still being slippery in ZN. So look at the chart. So we don't really get a good view on order flows in the Japanese yen, because while you can look at the order flow for the futures, the majority of the volume is going through in the Forex, and we can't see what that volume is. Okay. And if you look at the cumulative delta for the futures, it's kind of confusing and doesn't make sense because it's mostly hedging. But when you kind of zoom in here and you look at what happened, okay, there was like this big sell before the news. There was this big spike and come back on the news. There was like these other spikes afterwards, but there is a bit of a consistent trend kind of forming here. So there could be some intervention or some sort of unwind going on in the end. That's kind of what I'm hoping here. Because I can't explain why the treasuries would be so slippery otherwise. Right. When I see the treasuries move a couple of ticks on less than 1,000 contracts, I'm immediately thinking currency move. News, currency move, something like that. So basically means it's not the market orders that are that pushed us there. It was largely these limit orders canceled, and so it was very easy for them to take those prices, and then the market orders would just kind of flow through. If you're so lucky to catch the edge on those. Okay, so they're still being a little bit like, okay, so they came to 27. That was the last local high. Got up there very quickly, falling back very quickly. S&P 500 really taking off there. There must have been some positive earnings or something of that nature there. NVIDIA Corp to acquire GPU orchestration software provider Run AI. Would that really cause a rally in the S&P 500 like that? It kind of sounds like small cookies. By the way, another thing here. So remember our cost basis indicator? Okay, well, the stop out zone definitely was like a thing. Okay, but then when they came to the seller's cost basis, they've kind of gone quite a bit through it and rotated around it. So it hasn't been a very effective line here. I'm going to guess. I'm not going to go and do it because I'm lazy and I want to screw up my workspace. But I'm going to bet if I had the cost basis indicator on like ZF or ZB, that maybe it would be more close to the line on CF. Because it does seem like, look, here's ZB. Whoa, what was with that? Here in ZB, flat. Here in ZN, flat. But in ZF, they've been up. So the short end of the curve is driving us. And hence you see just a little bit of steepening. That's where we're at so far. So Anthony Crudelli says, I wore the same black gym shoes for a year after I had pulled out of a drawdown. They gave me confidence as a trader. Having confidence is such a crucial tool you can use. If you believe in something, then in yourself, it's amazing how you find ways to make money. And I responded to him, you know that being superstitious is bad luck, right? You remember from I'm Uzi, because you've been here the longest. I'm relying on you. If I like die in some freak accident, or I get brain cancer or colon cancer or something like that, probably colon cancer is the way I'm most likely to go. Okay, you got to make sure that the quote I am remembered for the most is that being superstitious is bad luck. I feel like I came up with that. Maybe somebody else said it before me, but like that's my phrase, man. You make sure you remember. Octavius, why did you take that trade? I don't remember anymore. No, I do remember. Okay. I took 2 losses and I was really pissed and revenge traded and got lucky. But actually, when I come in and I look at my flows, okay, JPY intervention levels may be further away than thought, but we are getting some evidence that there's something going on in the Japanese yen, and I would expect that to be a long flow. Durable goods was kind of like, meh. Okay, 5-year auction. Yesterday's auction was positive. I'm expecting today's auction to be positive as well. And we're getting Israeli military action that would be like flight to safety flows potentially. So that's why all of my flows kind of suggest, you know, mildly long in the treasuries. Okay. Also, when we were down in here, like there was some stop outs, but like pretty heavy absorption around it. Actually, you can still kind of see them. Like around here, there was a stop out, but like the market makers absorbed it. When the market makers were like loose over here. So like the way I read it is, you know, there was like low latent liquidity here, and then there was high liquidity here. So I expected they should be able to do this. And they did. Now, I'm kind of relying on the yen and the other things to potentially push us up, and the auction, I guess, to potentially push us up and break the highs. So, still in it. That was kind of the thinking on the trade. But clearly, the two trades that I took first were bad trades. I don't know what I can do about those. Just a bad read, I guess, because I didn't get any favorable ticks on them, and on one of them I held way longer than I should have. Very slippery. I haven't had to deal with that for a long time. That's something that can really frustrate me, is when you get in this area where it can tick around like 4 ticks on practically nothing. Okay, interesting. Here on the equity open, I'm getting a little bit of bullish stacking. So multiple bullish stacks now at 26 and 24.5. Something else I would add is that we did get that kind of like spoof offer that reversed. So let's see how they fare. Something that really frustrates me lately is that some of my best trades have come after I lost 2 or 3 times in a row first. So like right now, this is a big winner now, making almost 20, but that will still be -7 on the day. So if I want to make a profit, I'm going to have to hold it until like down here. Although I do think I could probably, I might even honestly be able to get 4.6, to be honest. Okay, that's interesting. So the Israeli army is raising the alarm and closing roads into Lebanon. They already attacked 40 sites in Lebanon, but some of the things I'm seeing there kind of make me think that they could be doing more. I like the long Zien, but for a rational setup. What do you mean by a rational setup? Like, oh, they busted the lows and now we're up here so high, they probably are going to break the highs. Don't buy the high of a range. Yeah. This, I think, one of the frustrating things about the way that I trade is that, like, buying high on the breakout is great. I mean, it can work out great, but it doesn't always work out. And a lot of the time, they just kind of dink around with those levels and frustrate you. Okay, so this is a large iceberg at 26.5 now. Let's not call it a large iceberg. Let's call it a medium iceberg. New to price ladder trading, any help and tips? So my biggest tip that I would give you if you're learning the ladder is do not think that it's a silver bullet. Because a lot of people come in and they think, okay, all I'm going to do is watch the price ladder and I'm going to see some patterns and stuff and get some feel for it. And then I'll be able to make money just from doing that. And you might have been able to do that like back in 1999, but you can't do that anymore. You're going to have to know things. You're going to have to know what's going on, what are driving those flows, what are some institutional levels that different types of institutional strategies might be looking at, that sort of a thing, and kind of combine it all together. So this is here why I go through the flows, right? These are the things that I know that are going on that could potentially affect the orders that we see in the treasury market. Now, we're gonna find the best info this stream, probably. Well, but where I get a lot of my info from is Zero Hedge, some of it, because Zero Hedge will repost analyst reports from Goldman Sachs, JP Morgan. That's really where the good info is from the main Wall Street analysts. But I watch Twitter, I watch Reddit, I try and get little pieces of information from wherever I can and try to stay as informed as possible. That includes staying informed on geopolitical developments and political developments in the United States. And sometimes political developments in Europe and the UK. Although I would say that the UK hasn't mattered nearly as much since the whole Brexit thing. Can you believe that the stream was that we were around and we traded that? Because that was some crazy stuff, man. I'd have made $1 gazillion in the trading arcade gold rush. If we had the technology, I think that I could have been pretty competitive back in, you know, the late 90s, early 2000s with just trading the DOM. Yeah. I also think that if I was an institutional trader, I would like to give that a shot. I don't think it's ever going to happen, but I would love to give it a shot if I had the opportunity. It'd be hard to get me the opportunity because I make so much from doing site reliability engineering, but okay, so let's tick back and forth quite a bit here at 26.5. I'm gonna recenter it on there. Just want to reiterate that entire like downtrend and now this recovery, not a lot of change in cumulative delta to make it happen. So the treasury market is being slippery today and very illiquid. At least the 10-year is being much more illiquid than usual. But it does look like that the flow is really actually in the 5-year. So if we're like looking for market orders to be clashing into, right, we want to look right here. Right here, there's new highs. Don't count 0.2 because only 87 contracts went through there. Okay. You know, we want to see market orders come and slam on through here. That's what we like to see right now. That's kind of like the next scenario long what kind of order flow I'd be expecting to see. So like that take right there, that's encouraging. We'd like to see more stack at 0.22. Okay, there's an iceberg there. So it is doing the level break setup. So because Valentino's here, I'm kind of like thinking about that. What could I explain at this current time? This is a classic setup. Okay, in normal circumstances and in this circumstance, it's a 50-50. But on a trend day, it wins every time. We get up to a high, you'll see iceberging just below the high on the bid. So 27.92, it's a decent amount. Somebody is buying right at the high, and then typically what will happen is they will either slam those offers or the offers will pull and will just slip through. But again, in this situation, 50-50. And in fact, they ticked down. That's another thing that happens is they will kind of play around with the level a little bit. But that's what I'm hoping to see is for the 5-year to slam through those prices. Well, the equity market sure looks good today. You know, there was that kind of early start looked kind of bearish, but they seem to be plowing through that pretty easily. Gonna start watching on the daily? I think. You know, I have every trading session for the last like 7 years saved here on YouTube. So you can always go back and watch them, right? See what I was thinking. And you know what? A lot of the time you see what I was thinking was like absolutely stupid. But we always figure it out eventually, right? Like that's one of the things that I think is really important about order flow, and especially understanding how, you know, what will drive flows, right? Is that at the end, we can explain what's going on. We might have to do a little bit of research. It might take a day or two before like the information comes out to help us explain, but it will always explain why the market did what it is. Like, you take the flows that came through and it will perfectly explain the price. It is a, what would you say? Deterministic. It's deterministic. Whereas other things that try and explain what's going on in the markets, whether you're using fundamental analysis or technical analysis and whatnot, there's always going to be these situations where it's like, well, you know, my system says, you know, I'm going to predict this and it didn't happen. Why didn't it happen? You don't actually know, right? Whereas with the flows, we can just say, well, because these are the flows that came through. And we can maybe do some research to try and find out why those flows came through. So we can always explain what happened. Of course, the challenge is still, okay, so how do you predict those flows? But once you know that it's the flow that matters and what you're actually trying to predict, then that really reduces the problem space. Yeah. Now, today is a little bit of a different issue because today we've been having a lot of moves on not a lot of volume. So for some reason, the market makers are kind of pulling their bids and offers and letting the market skate around a little bit. And how would you predict that the market makers would do that? That's a flow. That's a flow. Limit orders canceling. How would you predict that? I don't know of anything that would predict that. So that's kind of tough. Let's see here. 741. One of my concerns, and I think I may just have to let it ride. One of my concerns is that the auction is one of the bigger flows here for today, I think. And I do think that will push us up a little bit. That's why I was like, we could maybe even see 4.6. Okay. But if that's the case, some of that flow might not come until later. And so probably we'll have to hold it and after we're done with our trading session. Good short off the bounce of the 2-week V point of, I think he meant VPOC. Now I think they will try to burst through the second try, break the initial balance. I also think that they're going to try and bust the initial balance, the highs. It's just, I'm not sure if they're going to do it while we're still here. We may be chilling here at 26.5 for a while. You know, if I was just going for a simple scalp, I probably would take some profits in that zone. Information overload, Smitty says, talking about Octavius's chart in Discord. It is a lot on his chart, that's for sure. It's kind of one of those things where, like, what you actually look, there's a lot of information on my screen, but what I'm actually looking at is often very simple, right? What is the best offer and the best bid, and how many contracts trade into it for it to tick up? That's what I care about the most. They did kind of fall out there. Is this going to come back to 26.5 and be a false breakout, or are they going to develop a new hole here at 25.5? does kind of look like that the flows long in the 5-year, at least for now, have kind of subsided. What was the most excursion that I got on that? It actually was giving me 19 at one point, really. Okay, well. I want to keep it centered at that 26 though. Yeah, not enough of an imbalance in that area to get them to hold the tick up. So I'm concerned that we might go through a little bit of a retracement here. Thinking back on what happened, I don't think I've ever seen like a stop out, and then, get everybody short and then slam it the other way. That's so clear as that. That is in the treasury, man. That's pretty wild. They stopped out all these guys down here, and then the volume completely retraced. It was nothing but up. Pretty interesting. Okay, so there is a relatively large bid at 24.5, and we've kind of had like this large bid and large offer around the edges there. Looks like it pulled a large offer showing up in the 5-year. See, this is where it gets frustrating because, like, it took so long for us to get up here, right? And then it comes all the way back 1, 2, 3, 4, 5 ticks in less than 5 bars. Like, that's some real selling coming in there. How do we know that those are stop outs? So we don't necessarily know. But what we did see happen was a break of the low, a pretty large change in cumulative delta, and absorption down in there. And like the way that the orders came through when we were watching it on the DOM was, a lot of orders came through all at once. So I think it's a pretty good guess that intuitively that there was probably a lot of people getting stopped out on that move. But we don't actually have a way to prove it or know for sure. So another pretty big, this is weird. See that change in cumulative delta in the 10-year? So maybe there are some sellers out there, but then that comes back to my flows where I'm like, okay, what is the sell flow here? I don't see it. But maybe somebody's selling the Japanese yen because the yen is coming down with it. Well, I'm going to try and hang on here. But if they completely retrace this and go for the lows again, that's going to be a pretty jarring, what do we call it? range, whatever. I mean, it's not normal that the Treasury does. Normally, the Treasury will be like bounce, bounce, and then kind of chill, right? To go back and forth across the range multiple times is unusual. There was a 2K MBO at 24.5. Well, a decent amount of volume is traded there at 24.5. I'm more concerned about what's happening in the 5-year, right? Because they were the ones that were driving the action up. Well, something we should watch here is, okay, it seems like we kind of fell down there pretty easily. If we do get an up move, do they slip back through? Or is it a little bit more of a slog? Because if the next, bull run is a little bit more of a slog, that concerns me, I think. That this sells are so strong and slippery, and then the buys are so gentle. But that just makes me, but then it would also just make me wonder, like, who is selling this? Why are they selling it? I don't understand. Okay, I'm gonna go check on something here real quick, and hopefully it doesn't do anything crazy while I'm gone. Uncle, I'm trying to scratch. I don't like that take at 24. Was okay while I was gone, but then as soon as I sit down, they're like, okay, Seth, look, we're gonna take all your profits. Batch. Can you believe that I had 19 ticks favorable on that, though? So I'm realizing that I really am not in the position to try and let this swing until the auction today. Man, I'm awfully frustrated by all this. So I still believe there's a good chance that we bust those highs, but there's clearly something else going on that I don't understand. So I think that I need to take a step back. And so in that situation, scratching is probably the best thing for me. Because the worst thing I could do is let it go into, you know, like have 19 favorable ticks and then have this come and bust the lows and get 19 unfavorable, right? I do still see evidence that they're kind of following the Japanese yen, so that's another thing. You say TLT is weak? Well, I'm still finding myself rooting for it. So, like, emotionally, I'm not out of the trade. I'm still sitting here like, come on, you can do it. That really is kind of like the most frustrating kind of situation that you can be in. You're in a trade. We were in from here, essentially, right? It comes up slow and steady. Slow and steady. We're loving it. And then boosh, right? Big change in cumulative delta short, right? So we lose all of our profits just like that. We have to stay in it forever to make anything, and then you lose it all quick, right? We would much rather see like, oh, okay, if it's going to reverse slow and steady up, slow and steady down, or fast up and slow and steady, you know, so that you got plenty of time to think about it and see that the flow is coming the other way and get out of its way and that sort of a thing. But nope, it's just like by the time you see it, it's too late. And what could I have known that was going to tell me that that was going to come through? I got nothing, because I got nothing that tells me about people selling today. I'm perplexed as to what the selling is. Oh well. Oh well. Where does that put us? 950. That's okay, I guess. The $30 and then 20 is 50. Yeah. Okay. Would like to be up 30 and then, you know, pay for the commissions. You know what though? I think that I executed on those first two trades poorly and everything. Like, really, I would have preferred that there was only like one trade today and everything. But I do think that I'm okay with having taken a trade today. I think there's a lot of other times where I should have taken trades and I didn't lately. I'm mad about that, but you know, sit down and like, why did I not trade those days and I traded this day? Am I just completely off? Now, I think that it was okay to trade today, and that I should have traded those other days. Isn't the heater on? Hold on a second. Well, the heater's not on, but it is awfully hot in here. My original position was from 4.7, so like I puked it, but it hasn't actually gone beyond that. Start to get a little bit suspicious when it seems that my entries and exits are all around the pivots, right? It looks like they are going to step back up to 24.5 though, possibly. I think I need to sit on my hands, but if they do go back up to the highs, I'm going to be very upset. I'll be very upset. Just looking at that cumulative delta there wasn't enough oomph to carry it through that prior high. Well, I mean, there hasn't been enough oomph for it to carry it anywhere today, you know? At least not in the 10-year. In the 5-year, like look at, remember the auction today is in the 5-year, right? So when you go and you look at the 5-year treasury, okay, like I can see, I can make the case large meta order long in the 5-year. But over here in the ZN, I'm not sure I can. Starting from here, it's a little bit messy. And then the 30-year, it's a little bit messy. So there's been a lot of movement that basically cumulative delta right now is not very indicative. Or cumulative delta and price are not as correlated as they normally would be. So that is maybe a sign that we shouldn't be trading. I think that we had a good enough flow and kind of like confirming signals on it to take the long and everything. But now that I'm out of the long, I have a hard time justifying getting back into it. Because cumulative delta is playing games with us today. And, you know, the main thing I think I got going is thinking that the auction is going to be a positive. So if the auction is going to be a positive, what is that selling coming from? That's a large flow selling as well. And I can't explain that. Yeah. Now, I would also say that, like, the 5-year, they stepped up right to it. And remember I said, okay, here's a setup that they're doing right here. There's the level break, and it's a 50-50 in this situation. Well, it failed. And after that, you know, the positive flow that had been lifting us up just kind of disappeared. So, I don't know. Difficult. I kind of feel like it's been like that a lot with when I'm trading, is just difficult. It feels like it's playing games with me, you know, like as soon as I get into it, then it starts moving and it goes against me, and as soon as I get out, that's where it stops. Doing that a lot lately. Well, there's another down tick. One tick drills. You know what? I think that if I was only going for one tick, I'd probably do okay. I think that in the long term, 1 tick would be a break even, would be a, you know, because the issue is, you know, you lose 2. Like, if I wanted to do it like, okay, I'm going to take a long here, I'm going to catch the edge, and then I only want the 1 tick from the 24. Okay, well, what if it ticks down to 23? Well, if I have a stop there, it's like really likely to get triggered, right? So I probably want like a volume stop, something like that. And if it is a volume stop, there's a good chance that, you know, it slips through and I actually end up losing 2 at one point. Like, probably what I should do is I should have like 1 stop be a limit, a stop limit, and then the other one be just a pure stop, volume stop. So I could potentially lose 3, right? But most of the time I should make my 1 tick. So that's why I think like I would probably do okay and it would like look impressive to people, but in the long run wouldn't actually be a profitable strategy. Yeah, the left tails will kill it even if the win rate is high. Exactly. Because you really, now granted, most of the time you won't actually catch the slippage, okay? But the slippage is going to be enough that you're going to need like 70% win rate on something that's really more of a, you know, maybe a 55, 60% edge. So probably wouldn't actually work. Unless I had good queue positions. Okay, here's this big offer back again at 23. And I am not actually seeing the Japanese yen here is not down as much as the treasury is. So I don't know what's driving the treasury down again, but I wonder if I come back here and I look at like a daily chart. I don't know. I guess one could suggest that the treasuries want to push the bottom end of this range, which would be down to 107.16. And maybe they're ups, you know, maybe they're taking advantage of where it was in that rally from yesterday to sell the treasury, but it still seems a little odd to me. I am seeing similar to what we saw in this spot earlier, which is that there is a lot of trade happening in icebergs down here. It hasn't seen a stop run yet, though. Let's reset. We'll see. This is kind of like level break the other way now, right? Level break the other way, except for that there is an iceberg at 22, so that might just be... That stacking may just be the guy with the bid there, taking profits. Well, so when we were down here, I felt, you know, I was still kind of wished that I was in it. It was messing around. Now I'm really glad that I got out of it, right? In fact, a better trade would have been when I got 4626. I don't think I would have gotten filled there. So I think I probably could have made $15, $17 in reverse. Then that would have been amazing. No way I ever would have seen this selling though, man. No way. Always get a little upset when I see a really strong order flow that I'm not anticipating. Is this that strong of an order flow though? 93 to 83. It's only 10K contracts. So really, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 10K contracts for 12 ticks? Like, really? That's... It's like... Man, it's so weird because, you know, what I see on the DOM, and that's, by the way, a really big iceberg on the offer. what I see is pretty decent liquidity, but when you see it actually trade, it's actually like the liquidity just evaporates in front of the move. It's very slippery and very illiquid. So something that's going on here in Utah is we're getting a hockey team. And I kind of think I want to be like involved in this, you know, like a super fan. I don't know if I'd buy season tickets. I would like to buy like season or half season tickets, but like, I don't know if I could convince enough people to come with me and or watch children for me to do that. Unless I'm going to get like 3 of them. And anyways, that's... So anyways, they haven't picked a name for it yet. And every time that somebody on the subreddit suggests a new name that seems pretty decent, they go out and trademark the name. So apparently they're going to have like a name tournament to name the team. That's going to be interesting. Dude, with the icebergs 10K on both sides, at the lows, anywhere else I would be like, you know what, that's probably going to create a liquidity hole and we're just going to stay here. But in this situation, I think that they're probably going to, you know, make it slip both sides here, and then we'll see where it goes. South Park cows. I think that it's going to do this. It's going to do this, and then it's going to do that. And then maybe we go up for the auction. Because there was big icebergs on both sides. They've made 22 go offer now. The South Park cows. Well, you know, I might be surprised by how a naming tournament works out, but I'm going to guess that Yetis is going to be the most popular name. The one they added to the list are Mammoth. Okay. I guess people have identified the LLC that they've created to do the solve through. Okay, there it is. I'm quite surprised, guys. Look at that. Those are stop orders, man. Those are stop orders. Okay. And actually, like a pretty large amount, 10K selling here on the break. Like the whole move down was 10K net orders, and then they broke the low and it was 10K more. Wow. Do you use the MES for an inverse correlation with the treasury? I would say that as of late, the correlation between equities and treasuries has been pretty weak, but the correlation can be a positive or negative depending on the macroeconomic narrative that is moving them. So in the current situation, I would expect them to be slightly negative, I would expect them to be slightly positive, which is to say that selling in the treasuries higher interest rates should be bad for stocks and the stocks go down too. But I'm not too convinced that this move down in the treasury is what's killing the S&P 500 because, the S&P 500 has been doing its own thing. So then it's kind of more of just we want to know what's going on with the equity indexes and the market in general, even if it's not directly correlated with my market at that time. So it does look like they're kind of retracing here as those stop orders disappeared, or stop orders. I feel that was stop outs, and now the stop outs are done. It's gonna rebalance, right? By the way, that selling was really hard in the 30-year. So we just saw the yield curve steepen considerably. By the way, the 5-year, look at the 5-year. Look at the 5-year. Okay. It's okay. It's fine. Goodish. All of the cumulative delta for the session wiped out in 2 bars. Wow. Well, I think I would say that the liquidity is still soft, right? There is moving that far on 10,000 contracts is a little bit much. So the liquidity is a little bit soft. But there is a strong seller out there for some reason. I am using on those charts, it's the Sim22 Delta. Actually, you can see it there on the name. It's probably, text is probably too small for you to see, but it says Sim22 Delta V4. So my news squawk was just talking about the treasuries, and they were suggesting that there has been some option activity hedging possibly for the Federal Reserve meeting next week. He was saying dovish, yada yada yada. Wouldn't that be long flows though? But I guess not. But that kind of makes me wonder if I need to be cautious until after the Federal Reserve meeting. What's your new view on the Japanese yen? Do you think this new low is going to force the Bank of Japan's hand to raise rate? Okay, so the narrative was that 155 was the line in the sand, that they wouldn't let it go any further than that. I do believe we've touched that today. I have seen some action kind of suggesting to me that something is going on in the Japanese yen. Clearly, though, the treasuries care more about something in the treasuries themselves, although it's kind of unclear what's going on there. Maybe it is hedging in futures. But I've also gotten some information from my news squawks and so forth that suggests that the line in the sand has actually changed. That the Japanese are actually willing to let it go all the way to 160 now. So they are doing, I think it's tonight or tomorrow night. Actually, let's come and find out. They do have a policy meeting this week. Okay, so it is tomorrow night. Tomorrow night, Bank of Japan policy decision. So they might kind of be in wait and see mode until that's through. So let's put here in news and events, because this was kind of an unexpected one that I don't think we would have known about beforehand. Possible hedging before FOMC next week? Question mark. I don't know. I think though today, I'll show you. Oh, it's embarrassing. Is it embarrassing? It's not that embarrassing. This trade right here, minus 20 with no MFE, that's embarrassing. That should have been minus 5. This one, these two, maybe to some degree revenge trading. But like look, this one went 20 ticks. Like that was a good trade. I wish that I had gotten something out of it. I wish that like when it came back to 10, I had taken the 10. But clearly I was not able to predict the flows very well today, right? My bias was slightly long in the treasuries. Right, let's, instead of calling this trades, let's call this results, right? So that I can say, here's the trades, but I can also say what happened. Strong selling flows. So I will say, bias wrong. Strong selling flows came in. Possible hedging. Oh man, Obsidian, you missed the discussion about that because we talked about that earlier. But I will do it again. Maybe if I do it again, I can do it faster and better. Okay. The Japanese have been doing ultra low interest rate policy for almost 30 years. This is the first time in a long time that they've had an interest rate that was positive. It's not positive. It's just basically it's zero. And that results in pension funds and anybody else that needs to invest for retirement and so on and so forth. They can't buy Japanese treasuries. They can't, so they have to go abroad. So all of that money comes out of Japan and into US treasuries and other places around the world, right? So that means that the largest segment of demand for US treasuries comes from Japan. And that's why the correlation between the Japanese yen and the treasury is so strong. Now, it's not always perfect, because sometimes when we have big news events, we will see divergences between the treasury and the yen correlation. But generally speaking, if the Japanese come in and do intervention, it tends to help the treasuries. So I was kind of, tepidly doing that. I think the main reason I was long was for the 5-year auction. I still think the 5-year auction is going to be good. But clearly there's something else going on here that is a stronger flow than that. So They are kind of coming back a little bit. I do wonder if that move down to new lows might have been the worst of it. Doesn't mean a buy, but maybe they kind of find a decent place somewhere here between 22 and 25. Hmm, 27. That's the other thing is that I really hate taking a loser on the day that's that steep. But oh well. That's okay. I think that next week and the week after we should be able to get some decent trading. I do kind of feel like today that I'm just kind of shooting at the dark. I don't know. I'm more and more adopting the persona of like, you know, like we're just doing our thing here, and you know, most of it probably is just random. Even if we have a really good empirically based approach, the kinds of situations where we can really effectively take advantage of it seem to be pretty slim. It does kind of make me think like, okay, so let's try one here. Let's do this like, okay, change that. I'm gonna do this to experiment. And actually, let's do it all automated. Okay. Oh, I don't have any strategies built over here. That's interesting. New. Scalp. Okay. So try that. I'll make sure that this is set to I don't know even where to get it from. Maybe you have to click OK over here before it pops up. Okay, scalp. Yes. Let's say one tick. If I get long here. Oh, you know what? I should not cancel that. Cancel that. We also need target ticks right here. One. No fill? Oh. We're getting oil numbers here, by the way. Come on, come on. I think that got filled. Okay. Okay, so it did not do it. I want one like that, and then I want one that is like a stop with volume like that. So it looks like, I mean, I really don't like this stack on top of me. So this probably will stop out. Let's see. Okay, well, here's the oil numbers are coming through. I'm seeing a little bit of a spike and then retracement in oil so far. Okay, it stopped out. So and it stopped out at -1 tick. Okay. I don't necessarily think this is a good setup. Oh, wait, why am I 3? I love how it wants to do 3. That's funny. All right. So, oh man, that one died. That one took 2. Oh wait, that was a stop limit, wasn't it? I don't know. My strategy, it doesn't seem to work. It seems to only work if I'm doing 3 orders. So I guess I have to do it manually. Guess I have to do it manually if I'm gonna play that game. They're kind of trending down again, though. I was like, maybe that was the worst of it. Clearly not. Maybe there's some settings over here that would help me do this. Let's see. There's a bunch of settings in here for shortcut keys that I'm not familiar with. I think I remember Stop Hunter, but I didn't know that there was shortcut keys for that. They didn't break the low, but man, they sure came down there. Well, I am glad that I scratched that last trade. I'm disappointed. I'm disappointed that my little stop strategy thing doesn't work here, but maybe I can work it out with shortcut keys. It looks like I can switch it really easy, so yeah. But tomorrow's another day. I don't know if I think that I might be a little bit weary here about tomorrow and the day afterwards until I'm really sure I know what's going on with the flows, right? Because today some sell side demand come in that I'm not aware of, and if it's like hedging for a Federal Reserve meeting, then that might make me not want to trade it until the Federal Reserve meeting, right? But I'm gonna end the stream a little bit early today because I got to try to get to school. So sorry, guys. And what should we call this stream, the title? Thanks for everything. Thank you. I wish I could have come in and shown you like some really great trades and predictions of the flows for you, but today's not our day. Want to say something about how it was a choppy day. Slippery chop, breaks lower. That kind of sounds sexual somehow, but I think we're okay. Hey guys, I will see you tomorrow. Stay excellent.